The United Kingdom government announced plans on Monday to mint its own non-fungible token as a part of a push to become a world leader in the cryptocurrency space. Finance Minister Rishi Sunak has asked the Royal Mint, the government-owned company in charge of minting coins in the United Kingdom, to design and issue the NFT by the summer, quote-unquote, which is what City Minister John Glen said at a fintech event in London. NFTs are digital assets that use blockchain, the technology that underpins many cryptocurrencies. It uses them to represent ownership of a virtual item, such as an artwork or a video game avatar. They've gained a lot of traction in the last year as celebrities and large corporations have all increased their adoption. The UK's NFT initiative is part of a larger government effort to lead the way in crypto. The minister announced a number of steps that the UK is going to take to increase the regulatory scrutiny of digital assets, including plans to bring stablecoins into compliance with the United Kingdom's existing electronic payment regulations. Consult on establishing a world-leading regime for regulating the trade in other cryptocurrencies, including Bitcoin. Request for the Law Commission to investigate the legal standing of blockchain-based communities known as decentralized autonomous organizations. Investigate the tax implication of decentralized finance, or DeFi, loans, and staking, which allows crypto users to earn interest on their savings. Create a crypto asset engagement group, which will be chaired by ministers and include representatives from UK regulators and crypto businesses. Investigate the use of blockchain technology in the issuance of debt instruments. Stablecoins are crypto coins whose value is determined by sovereign currencies like the US dollar, are a rapidly growing but contentious phenomenon in the crypto world. Tether, the largest stablecoin in the world, has a circulating supply of more than $80 billion. However, it's drawn a lot of criticism for its lack of transparency regarding the reserves that back the token. The government is now planning to incorporate stablecoins into the UK regulatory system. Glen also stated that the government was widening its focus to include other aspects of cryptocurrency, such as the so-called Web3, a movement that proposes a more decentralized version of the internet based on blockchain technology. No one knows for certain how Web3 will look. However, there's a good chance that blockchain will play a role in its development. We want this country to be at the forefront of seeking the best economic opportunities, says the Minister Glen. The government's NFT plans were met with skepticism by Mauricio Magaldi, the Global Strategy Director for Crypto at fintech consultancy 11FS. In an emailed comment, he said that the decision seems to be nothing more than a strategic PR play. However, talk of the United Kingdom becoming a crypto hub appears to hold more of a promise, he added. As policymakers around the world begin to take a closer look at the $2 trillion market, industry insiders have been calling for clarity on the United Kingdom's position on cryptocurrency. Last month, U.S. President Joe Biden signed an executive order urging federal agencies to work together to regulate cryptocurrency. The move was widely regarded as a benefit to the industry. Meanwhile, European lawmakers recently voted against legislation that would have jeopardized the future of cryptocurrency mining. They did, however, enact new regulations that crack down on anonymous cryptocurrency transfers. Back in the UK, regulators have been very harsh on digital assets. The Financial Conduct Authority has rejected the vast majority of cryptocurrency firms that have applied to be registered with the watchdog, citing concerns that too many financial crime red flags are going unnoticed. The FCA extended a critical deadline for crypto businesses on a temporary register, including the Revolut and Copper, to obtain full authorization last week. Copper is advised by former UK Finance Minister Philip Hammond. After failing to make it onto the final register, several companies, including Blockchain.com, B2C2, and WireX, have been forced to wind down their UK crypto operations and relocate offshore. The FCA has only approved 33 businesses. Chancellor of the Exchequer, Rishi Sunak, has asked the Royal Mint to create a non-fungible token by the summer. There are a few details as to what this NFT is actually going to look like and whether it'll have real-world value, or the number of items that are going to be minted and available for purchase. However, it's likely that something commemorative to mark the moment when a nation launches NFT collectibles. It's not uncommon for nations to create and sell NFTs, with Ukraine creating 54 NFTs to document the early events of Russia's invasion. These NFTs assisted in the support of their military and received millions of crypto donations from around the world to aid their efforts. This is a pretty significant indicator of the cryptocurrency adoption by the United Kingdom, which was one of the first countries to take NFT technology seriously and create value for collectors. The European Union passed legislation earlier this week to strictly regulate the Know Your Customer cryptocurrency transactions. If passed, this law is going to require crypto exchanges to report their customers to authorities whenever they conduct a cryptocurrency transaction worth more than €1,000. Now, the crypto community has expressed some outrage because of this law unfairly targeting people who use cryptocurrency rather than fiat currency. The United Kingdom's NFT announcement, which came shortly after the EU regulation news broke, demonstrates yet another way in which the UK is distancing itself from the EU by embracing blockchain technology. Adoption at the national levels of the United Kingdom, Ukraine, and El Salvador validate crypto investors and the mission of financial freedom. In addition, the United Kingdom is considering issuing a central bank digital currency to its citizens as an alternative to using fiat currency. A CBDC task force was formed to bring together the HM Treasury and the Bank of England to coordinate and investigate the formation of a CBDC. There's a lot of red flags with this news, as well as the possibility of central banks creating and controlling digital currencies. These digital currencies would be vulnerable to the same pitfalls and outside influences that traditional fiat currency is. According to the Bank of England, crypto assets such as Bitcoin are risky, and investors should be well prepared to lose all of their money. It also claims that a digital currency issued by the UK central bank would be reliable and retain its value over time. With inflation at 6.2%, it's understandable that investors are looking for safe haven assets and have lost complete faith in the central bank's monetary policies. The CBDC would also make transactions more vulnerable to surveillance and payment tracking. With a centralized currency, though, it would be so much easier to monitor transactions, to control your payment processes, to close accounts. And all the while CBDC is still being investigated, it would be compatible with decentralized cryptocurrency adoption and financial freedom for citizens. The crypto community is hoping that the Royal Mint's creation of an NFT means that the UK is taking that significant step towards the adoption of decentralized blockchain technology. Nations are accustomed to having complete control over their banking and their financial systems. However, they're beginning to realize the benefits of digital currencies and incorporating them into their own centralized currencies. Resisting the decentralized nature and benefits of blockchain technology, it can last for a while, but ultimately it's going to be futile. And countries that adopt this technology sooner are going to be much better off than those that resist the inevitable change. This is part of our plan to ensure that the UK financial services industry is always at the forefront of technology and innovation, Sunak said. The Treasury also laid out plans to regulate stablecoins and recognize them as a valid form of payment. Stablecoins are cryptocurrencies whose values are pegged to existing traditional currencies like pounds, euros, and dollars. These decisions are part of a wider plan to make the UK a global hub of crypto asset technology. That is, according to a press release. We want to see the businesses of tomorrow and the jobs that they can create here in the UK. And by regulating effectively, we can give them the confidence that they would need to think and invest long-term, said Rishi Sunak.